Toyota enjoyed a blockbuster fourth quarter but sees a bumpy road ahead. On Wednesday, the Japanese automaker forecast a 20% profit decline in the current financial year. It cited looming investment in both its suppliers and strategy for the projected drop-off. Despite that, Wednesday's results smashed market expectations. Operating profit surged 78% in the January-March quarter, while Toyota made a profit of $34.5 billion for the full year. It was the first time a Japanese company had reached more than 5 trillion yen, or just under $33 billion, according to local media. Toyota has been boosted by a weaker yen. It's also been a big winner from cooling demand for electric vehicles in some markets. In the US, for instance, more customers have bought petrol-electric hybrids, which are Toyota's traditional strength. Such vehicles made up more than a third of the 10.3 million cars it sold, while battery-only EVs made up 1% of Toyota's global sales in the year just ended. Toyota said it plans to invest almost $11 billion for growth this year in areas such as AI and software. But the automaker also faces challenges in key markets such as China amid mounting competition from local rivals. Investors toasted AB InBev's strong first quarter on Wednesday. Shares rose more than 5% as the world's largest brewer reported a 2.6% rise in revenues. It also saw much better than forecast earnings before tax, which grew over 5% to almost $5 billion. The maker of Stella Artois and Corona beer said it hit record volumes in some of its markets. AB InBev sales in the US have been hit hard by a year-long consumer boycott of Bud Light. That was related to a conservative backlash against a social media promotion with transgender influencer Dylan Mulvaney. It has seen Bud Light fall from the top spot as the best-selling US beer. Company revenues in the country dropped 9.1% in the first quarter, with sales to retailers down 13.7% due to the boycott. But North America volumes dropped less than expected. Analysts said its performance was a big improvement compared with earlier in the boycott. All brewers are set for margin expansion as price rises for key supplies slow. Rivals Heineken and Carlsberg also produced solid first quarter results.